Hello, YouTube. Today, the stock market closed higher, or the S&P 500. We're going to give an update to our seasonality chart because we're closing green. But we want to know, first of all, whether or not there are no more hikes. Is the job done? Can we put our pencil and our glasses away and say that is it? There are no more hikes. Well, when we read I just typed in Federal Reserve, go to news, and I just want to read a couple headlines here. Powell speaks on Fed hikes. There you go. Fed raises interest rates, leaves door open to another rate increase. Stocks are mixed as traders decide what the Fed is going to do. Fed approves hike that takes interest rates to the highest level in 22 years. So the fact we're closing green is like pretty significant. And not only that, we have another hollow candle. So that means that the expansion continues. And there's like a lot of evidence that we could be going higher. It's not a really big green day. We closed higher by 7 cents. It's not really that green, but I'll take it. And I'll take it because as we look here, we did close over our 52-week high, which was our previous one. Yesterday was the new 52-week high. And today we have yet another 52-week high. We don't have a high volume, but it was a pretty nice day today. Not going to complain. Let's move forward and see what else we have. Is Jerome Powell saying the job is done? We look at the news and the market actually closed up. The fastest rate hike in 22 years and the highest level. July, and this is what we were expecting going in. July FOMC statement guidance likely the same as June. Yep, they changed one word from, I think it was from modest to moderate growth, which means cool. Jerome Powell had a lot of headlines today, but he was really not trying to create news. So if the market closed flat, if we were worried about earnings, which we can look at right here, well, they didn't turn out all that bad, right? Microsoft and Alphabet, net, flat, right? S&P's flat. It's a little bit green, including Jerome. So now let's focus on Meta. Meta earnings are out. Here are the numbers. They tell us that they beat on earnings, they beat on revenue, but the cost for building out their metaverse and AI and all that is going to weigh on the stock. So when we look here to its after hours move, it was as high as about 7%. If we look here to a post market, we can note that we have Meta up by another 5. So cool, right? The rally and the squeeze continues. Oh my goodness. Got two more quick things for us to look at here. It's going to be the FOMC rate decision. We're going to look at the Fed watch tool, which means what we're expecting for future hikes. And then we're going to look at a pretty cool dark pool level to see who is making money. Is it the bulls or the bears? So what I want to ask you as we're going forward is to please consider smashing that thumbs up and subscribing to the channel. Thank you ahead of time. All right, so let's get forward. Let's look at Meta. Actually, no, sorry. Let's move forward. Let's get this economic data out of the way, and then we'll look at a couple of charts because we already know what the levels are. We've been laying it out for some time. So in line, right? Cool. So not really all that much going on here. Tomorrow, what do we get? We get GDP pre-market. Stay tuned for that number. I think this could be the juice for us to close a big update tomorrow. And if that's not going to be it, we also talked about how core PCE coming out at 8:30 on Friday or the 28th will be, I think it will be interpreted bullish. Will I be right? I don't know. Let's tune in and see what Friday looks like. But I think, again, keyword here being think, that I think we could go higher into Friday. I see the evidence for it. If earnings are out of the way, what's left? Mixed thinks. Ford, Enphase, cool. Who cares about those companies? I don't. No offense. These are just not as big or material to the market as the 30% of the S&P that reported this week. And I'm going to see if I can actually pull up that graphic really fast because it was a pretty big number. When we think about the percent of the S&P that reported this week, it was at about 30%. So let me just see if I can pull that up here. Let me see if I have it complete here because it was a pretty meaningful number for me. Let me just see if I can pull it up because I think this is important for us to look at. If we think about, well, if we're worried, is the market worried? Let's look at the fear and greed here. If the market is worried, then we're going to be noticing that we're not really going higher. So we're a little bit lower than yesterday. We're flat on the day. I wouldn't say this is good or bad. I would just say it is what it is. Hold on, I can't find it here. Anyways, the biggest chunk of the S&P 500 reported earnings this week. So like with Meta, we still have Amazon and Apple to get to. Here we go. But most of the earnings are now out. We had 30% this week. After this week, what do we do? Well, we still have a big chunk going into July 31st. That'll be the end of next week. But then after that, it's like, well, it really drops off. Most earnings are this week, 30% of them. So if we got through most and the S&P is flat to up, seasonality chart says up, what should we expect? Well, probably more up. And when we saw that Mike Wilson is giving up, well, that was kind of a clue that if the bears are conceding, what are they likely doing? Well, they're probably covering, right? They're adding fuel to the market. So if we look here to our platform again at thealgo.com, you can learn more about that by going to our website. What we're looking at here is going to be a dark pool tool. We're looking at the last 1 month, July 1st to July 26th. And we just want to see who's making money. So we look at dark pool and lit pool. We got 120 billions collectively. We're going to click on the overview. Sorry, we're going to go here to levels. And what we're going to notice that there has been, so July 1st to July 26th, there is currently $1.9 billion, which is profitable. And we note that 100% of levels are bullish, which means that for the last 26 days, people who have been, again, this is generally going to be smart money. They've made about $2 billion through dark and lit pool. And they've made it's just gushing, right? 54 million bucks at 452.18. It's huge. It's huge numbers. So if they've made money, every level is bullish because we closed at a 52-week high. We got through Powell. We got through earnings. Well, what are we worrying about next? Well, I'm not sure. So please drop me a comment and tell me what you're worried about. But if you look to our tool, this is like really simple. Okay, so 2 billion. Well, that's not pocket change. No. And this is just gravy on top. These are just pools. So if we think about that, it's pretty significant. If you look at the whether or not the market is actually priced in what Jerome Powell said today, because I'm making an effort not to focus on what he said because I think there's the news, but then there's also the reaction to the news, which is what we talk about. So we know what the news is. It was largely anticipated, and we can clearly see that here by just going to ES. We'll go to a 1-hour chart, and what we'll note here is here's where we were before Jerome Powell spoke. Here's the move going into the press conference. Press conference starts. Jerome Powell speaks. We go down, and then we go higher. So if we closed above 45.82, we are higher than where we were before Jerome Powell. If we go over to SPY, you have to just look at a 30-minute candle because the 2-hour is right here. So that's 454. So why is 454 important? Let's remind ourselves. So first thing, let's just hide everything. And if we look here to that number we just had, well, 451.76, which is highlighted here, that's our 70% Fibonacci retracement, which means so far, we poked through it last week, right? We poked through that area. It's the blue line that goes across the screen here. We poke over it. Now we got a higher low and higher high. And we're about to reclaim last week's high at 456.43. We punch up $1 more, or that seasonality chart plays out. We're closing over last week's high with another hollow candle and with a higher low. So there's no warning and the expansion continues. Isn't that like what we want to see if we're bullish? Yes, it is. So now if we look at the monthly chart, why was 454 so important as an area? Well, let's actually do this. Let's delete everything. Look over to here. We got 2 monthly highs, August 21 and September 21. The highs are 453.07, 454.05. So those areas were where we were pivoting just before Jerome. We're either going to dump or we're going to rally. And we talked about the bullish and bearish scenario on the weekend. So hopefully there were no surprises. So now if we understand that the market is like pretty good, we can also give an update to the daily chart here, which this is like pretty simple. I cleaned up the lines. We were going down and then we weren't. So we were going down. We would hit it back off, hit it back off, hit it back off, hit it, digest it, get over it, back test it. And then by right here, this is where we get to that crossroad. The downtrend meets the new uptrend. What do we decide to do? Well, we got a little bit of chop. We form an inverse head and shoulders. Ultimately, we get over the 50, bounce, 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 pop flag, pop flag, pop flag, leaving gaps everywhere on the chart. And what are we doing? Well, we're going higher, which is going to be this primary uptrend. And then we're going up even faster, which is this uptrend. What does that mean? We're like pretty mega bullish. Yeah, we're pretty mega bullish in a bull market, over averages at 52-week highs. I don't know what else to say. That's pretty bull. All right. And then if we look here to where the market actually closed out flat, we know the market pretty much closed flat. Let's look at those leaders we talked about yesterday. STZ closing at a new 52-week high. It's not a huge move, but this is what leaders do. Leaders lead. What a move here, right? We talked about this one yesterday. Continues to be strong. And then I want to briefly touch on team, which we talked about yesterday, before we look at this rate outlook for the Fed. I don't know everything, but here's what I knew. I knew that for Microsoft, there was a lot of this discussion regarding the cloud. So we can look here to Microsoft. It has a full candle. It closed lower than it opened. It closed down by 4%. Hey, that's not so bad. It hit the 50 and bounced. That's bullish. If it holds it, it's bullish. If it doesn't, it's not. But look at the candle. First of all, it's full, which means we closed lower than we opened. We fill the gap, and then we have a spinning top here. So all that means is that we closed lower than we opened. There was a little bit of too much bearish sentiment. We look at a name like Snow. It's matching. It's matching what Microsoft did. But what it did not do is actually fill the gap. It only managed to get to the 50 DMA and sold off as soon as the day opened. That's why we have no upper wick. So this one's weaker. It's also down by 5%. It did not exhibit that strength we would have expected. We can look at another name like Datadog, which is a partner of Microsoft, and this one looks better. So why does it look better? It's a hollow candle, even though it's down by 4%. So it's hollow. It's down by 4%, but it made progress during the day, where Microsoft didn't. It's more likely going to try to go higher because it managed to just show a little bit of strength today. And now if you look at a name like, I don't know, like Net's another name that people like to track and follow. So here we have the same thing. It's only down by 2, so the percent decline is smaller, but we have a doji. We're right around yesterday's low, and we're right on that 50 DMA. So that looks different too. And these are all names which would have been impacted by Microsoft by proxy. And here, because we just formed that golden cross on team, this one's down by negative 0.72. So it's down by the least amount out of the group. It also is a hollow candle, and there's very little volume here, which means no one really wanted to sell on the rumor or the scare that we're going to go down. So that's why it has a nice bounce here. We were kind of expecting it. It's carving out that area. We're over the 200 and the 50. We have that golden cross. And when we look here on the on the weekly chart, we're basing right here on the 50 weekly moving average. So this is looking excellent. This is exactly what I was calling out for yesterday. So it's not that I know everything, but I think that if we're just looking at the SPY, that's one thing. We want to understand what the market's telling us and how we can make money with it. That's what our goals are by trying to trade with me. And I think I'm really getting good at my process. Made some excellent trades today. If you want to follow us, great. If not, we'll see you tomorrow on the video. Finally here, because we talked a lot about what the market is expecting, so we want to think about the news versus the reaction to the news. So this number should have been at 99 point whatever. That was the expectation going into today. So what I want you to pay attention to is one thing. It's the 525 to 550 number. So Jerome Powell said some stuff today, but let's see if the market is now expecting a pause or cuts, because cuts is what we were trying to price out. So for we go here so up to September. Now we're going to be here at 500 to 525. Where's the July meeting? So let me actually just double check something here. So we actually raised interest rates. So we raised interest rates to 500 to 525 for September. Now we're expecting a 70% chance of a pause. So that we're expecting 70% chance of a pause right now. Let me just double check this number. Let me just refresh it. All right. So 500 to 525. Cool. We looked at November, 500 to 525. December, 500 to 525. We go into January, 500 to 525. Not a lot. It's not a lot over 50%, but it's still at 50%, which means from now all the way into the beginning of 2024, we're expecting rates to stay where they are. That's the no more hikes from the title of the video. But then here's where the market's pricing in a cut. It's not by a huge percentage, but it's pricing one in here for March 20th of 2024, or like 6 months. It's like 9 months from today. We're gonna see a 38% chance of a cut. We look out to May. Now, same thing here. It's a matter of whether we're going to be at 4.75 or 4.5. So, like going out all the way here till now, the market now has a 35% probability, or the highest amount, we're going to be 50 basis points lower in a year from now than we are basically today. We'll look out to July. It's the same thing. Actually, another cut baked in here. So the market's like really coming to where the Fed is, which means that it's been able to digest the move from these hikes. That's why we see something like the 2-year note down. You look here to the 10-year note, also red. So they raised interest rates, but yields went down. That's odd. Yeah, that is odd. And then we can also look here, if we look at something like a KRE or the regional bank index, it's up by 4.7%. So the Fed raised interest rates, but for some reason, banks went higher. So if SVB was an issue because of interest rates going higher, well, then why the hell are regional banks rallying more, closing in a nice breakout? Because they think there's no more rate hikes. Well, thank you for tuning in. If you want to learn more, the weekend video is now queued up here on the left-hand side. If not, thank you so much for tuning in, and I look forward to reading all of your comments. Thank you again.